Back with Bobby and Robby Radio.
Bobby and Robby Radio.
And we got Trevor Morton. He's one of our favorite guests that we've ever had. And he's a veteran of the show. He's one of our show partners. And what are we talking about today, Trevor?
Well, we're going over a couple things that have to do with mortgage. I want to focus a little bit on credit and the restoration process, and we'll go over any questions that y'all might have regarding types of products or who can get qualified, who can't, and that this is a great market today. Rates are going to slowly start climbing up over the next year, and now's the time to buy, but you have about a year before they get back to where they were pre-2008.
So what ends up happening, us as real estate agents, me and JJ, we get a call and somebody wants to go look at a house. First thing we do is we send them your way. And then what happens when they have bad credit?
So we like to pre-vet them, and I highly recommend that before you engage, you really know what your threshold is on buying, both price-wise and your ability. We see a lot of people and a lot of the younger generation not understanding the real importance of credit when it comes to buying a home. Maybe they've never taken out a credit card because that's something that they were told that they shouldn't do because they don't want to run it up. But that actually affects you as much as having bad credit affects you because you have no credit history. There are actually, and not a lot of people know this, but FHA, VA, Fannie Mae, Freddie Mac does not have thresholds personally on where they need on credit scores. It's individual lenders. And the number that I see a lot tossed around across the board is 620. You've got to have a 620 credit score for an FHA or a VA loan.
Well, I have an 810.
That's actually very good, Bobby. Thank you for pitching
that in there. Am I being judged right now?
No, that was very good. Okay. Congratulations on that great credit score.
I didn't know it was good or bad.
That is. It's a new high score, actually.
Okay.
Good. So that 620 has been tossed around as the threshold, but that's really not true. That's actually just a variable number that people like to throw out because it's comfortable. We've got the ability actually to go down on a VA or FHA loan to a 580 credit score. There's some other factors, and you have to jump through a few more hoops than if you have above a 620, but the products are out there to do it.
Yeah. Well, that's what I've seen. In my business, I've been helping people restore their credit since 2007, and it's really crazy that over the last 9 years, how for a while there anybody could get financed. I mean, if you could fog a mirror, you could get financed. And then the credit requirements, after the bust, they went up. I mean, we were looking at 640, 650, 660 credit scores. Then they came down to about 640, and even though, and now I see that as well as is around a 620. I know that at a 620, if I can get my clients to that score, then they're going to have an easier time. If they are at that 620 range, then they can get financing and get into the home that they want to do.
I get this all the time. I get a client and we're out shopping, and they tell me, I'm gonna wait. I'm gonna pay off some stuff so my credit goes up. Does that help their credit score? Say they're doing an FHA loan.
It can. I mean, it definitely can. Revolving debt ratio is 30% of your score. So once you're over 50%, it starts bringing points down. Yeah. So what I tell people is, listen, if you, use your credit. I mean, if you have credit cards and you want to use them, pay them up, pay them down, that's fine. But I would say that 30 to 45 days before you go in to make a purchase, especially a home loan, pay them down. You want to pay them down before the statement date so that 30 days from now when you come in, to see, Bobby or JJ at the Trey Group, and then they refer you over to, Trevor, to look at to pull your credit, that you're below the 50% mark. And 50% is a good spot, but if you can get them down even a little bit lower, down to like 19, 20%, that's actually the optimal. You don't have to pay them down to zero, but 19 to 20% is optimal, and anything above 50% starts taking off points.
How about having a bunch of credit cards that are totally paid off?
No, that's fine. You can have lots of credit cards as long as the debt ratios are fine on them. It's not going to affect your credit negatively.
So there's no benefit, there's no negative to having a credit card just sitting there with no balance on it.
Actually, there is, because when FICO looks at the scoring, the way it scores it looks at the limit on the card. So, and it also looks at the age of the card. So if you've had this, let's just say a Sears card for 20 years, and you've got a zero balance on it, and you got a $10,000 limit on it, you don't want to close it because it'll start taking points away from you.
So it would hurt my 810.
Yeah, it would hurt it'd probably bring you down to an 809. And at that point, it's going to be hard to get those
keep
new
them open.
And to come back, Robby, to add on to what you said too, Bobby, usually point them in the direction of either myself or Robby immediately, because if it's stuff like medical collections and you go out and you just pay it, it still stays there and haunts you.
Right.
You've got to do it the right way, and Robby knows how to do it the right way.
Yeah. So, yeah, and there is, unfortunately, I wish that common sense applied to, building up credit scores, but it doesn't. You pay off a medical loan that's 6 years old, you may have just lowered your score. As opposed to paying off something that maybe happened in the last 6 to 12 months, there's even ways to go ahead and pay things and get them deleted. But a lot of people think that if you pay something, it just gets removed. But that's just not true. There's very specific ways to get things removed from the credit report while paying your debt. So, and that's just an A+ right there. If you can pay your debt, get it removed, that's going to do a lot for your credit. So, but Trevor, tell us a little bit about, I know you do all different types of loans. What is something that you're seeing right now and, in the market that, this helpful advice for people out there that may be a first-time home buyer?
That's what I actually wanted to drill on. Thanks for letting it into it. First-time home buyers, we've created a very big rental pool in the United States because a lot of the younger generation is afraid of getting a loan. They're afraid of not only going in and not knowing what they're doing, but being told no. You can't be told no if you don't ask. And you have a team between the three of us gentlemen here,
Trey,
sitting here, we can...
No means no, Trevor.
Well, in the world of mortgage, no means in the future.
Right.
And we can point you in the right direction on what you want to do. If during college you racked up a bunch of student loan debt and you racked up a bunch of credit card debt, Robby will get you on a plan on how to pay that off and how to maximize your credit score. I'll give you some hints on what you need to claim on income and where you want to be able to afford you the house. And the most important part, you have Mr. Bobby Cortez out there showing you these houses that you can buy.
Absolutely.
So what's the best way for them to get in contact with you, Trevor?
Well, it is Trevor Morton, Morton, like the salt. My cell phone number and my personal line, 24/7, 365, is 210-725-1685. You could visit us also online at www.cachetreef.com.
And then also, if they need any help on their credit, Robby, how do they get a hold of you?
They can give us a call. Our phones are answered 24/7 at 210-248-9061. That's 210-248-9061.